In today's video, we are going to go through the steps to buying a home. Let's get into it. So in your steps to buying a home, I have with me today mortgage expert, CEO and president of his own mortgage company, Brian Royal from Royal Mortgage. Thank you, Brian, for joining us.
Thank you so much for having me.
Yeah, you're welcome. Okay, so let's get into it. So we're going to do a little bit of a mock example.
Okay.
We have some imaginary buyers. They are a younger couple and they are purchasing their first home. So they've called me and they've said, we want a 3-bedroom, 2-bathroom with a 2-car garage in this neighborhood. Find us something.
Sure.
And I've gone, okay, perfect. Have you been pre-approved? And they have said, no, we're not pre-approved as yet. We just want to see kind of what's out there. So show us what you've got. So I go and take them to one house. And it just so happens that this one house I take them to, they fall in love with. So now they say, okay, now we need to get our pre-approval because we want to make an offer on the house. And then I say, I've got just the person. Let's reach out to Brian and see what we can get done. So now our imaginary couple, they get on the phone with you and now they need to be pre-approved. So tell the viewers what a pre-approval means and kind of how you obtain that.
Sure. So the first step to getting a pre-approval is to doing a loan application. You can do the loan application over the phone, or you can go to a website. In our case, it would be royalmortgage.com. The loan application is going to ask you social security number, date of birth, income, assets, any other real estate that you own, etc. And so we're going to base the pre-approval letter based on your monthly debt obligations, more specifically, your monthly debt to income ratio. So a lot of folks think that a pre-approval letter is based on a purchase price. It's actually based on a payment. So it will depend on the specific property that the buyers want to purchase. But if everything is in line and the amount that they push out every month is less than 50% of the amount that they bring in, they have an okay credit score, they have a little bit of money to put down, then we can give them a pre-approval letter, hopefully for the home that they want to purchase.
Okay. All right. Sounds good. So now I have got this pre-approval. You've sent it to me and the buyers are super happy. And I am now constructing this great offer, negotiating terms, and we go under contract. Like they've found their dream house. This is their dream house and we're getting it. So now we reach out to a home inspector because we want to make sure that they're buying a great house with no issues. As their first time home buyers, they don't want to have to do a new roof or a new AC. So we get a home inspection and it's typically done by a third party company. And they come in and they do a top to bottom view of that house. And they look at all the major systems, appliances, your roof, the structure of the property, and then basically they give you a full report. So we're going through that stage. Now, what's going on your side whilst we're kind of doing the more upfront real estate thing? So I guess you're gathering loan docs, right? So what do you need at this point?
That's right. So after you get a contract, it becomes an official loan application. And that's when we're going to want to go for the full loan approval or credit approval. We would then issue a loan commitment. The things that you need for this, if you were self-employed, once again, would include the tax returns. If you were not self-employed, then they're going to want a full month's worth of pay stubs. They're going to want 2 years worth of W-2s, 2 full months worth of your bank statements. And if you own any other real estate, they're going to want to see the mortgage statements on that real estate. They're going to want to see the insurance declarations. They're going to want to see the property taxes. Some of this stuff we can do for the buyer, but there's also some stuff that we're not going to have access to. So there's going to be some homework in the initial phase of the loan.
It's going to feel like a little bit of work, right?
Yes.
You know, and it's new because especially these are example buyers, are first-time home buyers, so they've never done this before. And so all this is going to feel very foreign to them and being asked for a lot of information. But that really just is what we have to go through to get a mortgage, right? I mean, it's a lot of money that someone's lending.
Yeah, that's right. And they're going to tell us everything that we need. Then we send it to the infamous underwriter who looks at the file, puts their hands on it, makes sure that all the information is correct. If there's any page numbers missing, they're going to want
because they don't like it when you send 3 pages that you only send 2, and on the bottom of that form, it says 2 of 3.
Yes.
But you've only sent 2. They
Yes.
will ask for that 3rd page, right?
They will. And
Okay.
it seems a little ridiculous that they would get that detailed, but the reason that they have to have that is because of the Fannie Mae guidelines. And the reason the Fannie Mae guidelines are that way is because they want to make sure that there's not a secret deposit that's missing on the page that gives them a little more money than they actually have. Or maybe there's a big transaction for a loan that we don't know about. So they want to make sure they're not purposefully hiding that extra page that would be something that would restrict them from getting the loan.
So be transparent is basically what we're saying here. Okay,
Yes.
so we got the home inspection report back, and there were just some minor items. Some of the showers needed grout, the AC filter needed to be changed, it needed a tune-up, and some carpet needed to be changed, although that's not really part of it, but the buyer asked for it, and we managed to get it in. It's our imaginary couple. So we've negotiated that. We're moving forward. Now we're going to get to the appraisal part. So even though really the buyer doesn't play a part in this on the real estate side of things, this is quite focal for you. So just tell the viewers kind of what an appraisal is and kind of why do we need one?
Sure.
What's the steps?
Sure. So an appraisal is different from a home inspection. Now they will have to do an inspection to get the appraisal, but I want to make sure everybody knows the difference. Do not send your mortgage guy your home inspection. We really don't want to see that. I had an instance one time where a buyer sent his home inspection to the underwriter. He saw the underwriter's email on an email chain and thought that he was helping. The underwriter then conditioned for all of the repairs on the home inspection to be repaired prior to closing.
That's a need to know.
So keep the home inspection away from us.
Yeah,
the home appraisal is what we do. And an appraisal is a sales comparison analysis of all the recent sales that are comparable to the one that Mr. and Mrs. Homebuyer are purchasing that have sold hopefully within 2 months and within 2 miles of that property. And they're going to look at that as a gauge for what the value of the property that Mr. and Mrs. Homebuyer are purchasing.
Because they want to make sure, right? A bank wants to make sure that the money that they are lending is basically the right amount, right? That they're not overly lending money or, is that kind of why they do that?
That's
that
right.
Process?
That's absolutely right. And they're actually going to, for the loan perspective, going to go off of the lesser of the two. So they're going to go off of the lesser of the purchase price versus the appraised value.
Okay.
So even if we get an appraisal that's higher than the purchase price, we're still going to have to lend based off of the purchase contract. But it's great news if that happens for the buyer. It means that they're going into the house with some equity.
Okay. So we've got the appraisal back. It appraised at value, which basically means that it appraised for the purchase price, the contract price of the home. So we've got that back. So everyone's super happy. Now for loan approval, is that right?
That's right.
Okay. So tell us a little bit about loan approval and kind of how we get there and
Sure.
Good stuff.
So the borrowers provided their documentation. The underwriter's taken a look at the loan. We got the appraisal back. Now we have the loan approval as well. So this marks the halfway point of the loan process. Once we get our loan approval, the underwriter is always going to condition for just a few more things, maybe just to justify their pay grade.
The buyers are going to hear from the underwriter, or at least do they hear from the underwriter directly, or do they hear from you as a loan person or your loan processor?
That's
right.
Who
do they hear from?
So their loan processor should send them a list of the remaining items needed to get the clear to close or the final approval.
Okay.
The underwriter is also going to look at the appraisal. They're going to make sure that the comparables are right. They're going to make sure that there's no incorrect pieces of data that are on the appraisal. So they're going to do a credit approval and they're going to do a property approval. And then with the credit approval, they're going to give us one more list, which we will provide to the borrower. And once they get that list in, then they get their clear to close.
Okay. So we've had a 45-day closing and we're 30 days in at this point and we've received loan approval. So we're good to go, right? Like we're really kind of pushing forward. So from the buyer's point of view, at this point, it's happening. Like we're moving. And so now is the time where the buyer would get quotes from moving companies and, kind of start packing some stuff up and getting all their ducks in a row when it comes to actually moving into the house. So now that we're on this good path and we're 2 weeks till buyers can get into their dream house, what should a buyer never do at this point now? Because they've heard, oh, we're good. Like we've got this. We've got loan approval. So we're definitely moving into this house. That's what they've heard from you.
Yes.
What do people do now at this very pinnacle point, and what should they not do at this point? Go ahead.
The number one no-no after you get your final approval is to go out and borrow more debt. So a lot of folks think that, hey, I got my clear to close. I'll go out and buy some furniture. I'll go buy that new car I've been wanting to buy. This is a huge no-no because every lender is required to do a soft pull on your credit report within 3 days of closing. So if you go out and you borrow more debt, they're going to find out about it. Then they're going to make us pull a full credit report that could significantly impact the closing. It could also impact your interest rate. If you went out and borrowed more money, it could affect your credit score. And if it went down, it could make the interest rate worse.
So don't buy things, but that doesn't apply to all buyers, right? Like some buyers might be so financially stable that really, if they went out and bought $100,000 Ferrari, then it really wouldn't make a dent on anything. So it's case specific, right?
It is, absolutely. So you always want to run a buyer mortgage guy. Could be they have a 10% debt to income ratio. So they could potentially go out and buy a Rolls Royce and it not negatively impact the loan. So you always want to run a buyer mortgage guy if you are going to do something like this, just to make sure that it's not going to impact the closing.
So your advice is ask your mortgage lender before you do something like that.
Yes. So we are your friends. Your mortgage broker is not the underwriter. Your mortgage broker is there to help. They're there to provide insight and guidance along the way. So there's really nothing bad that you can tell your mortgage broker, because if it was bad, he's probably not going to tell the underwriter.
Okay. So Mr. and Mrs. Homebuyer, they are now 1 week from closing. So their loan approval's in, their moving company scheduled, everybody's ready to go. So we're going to do a final walkthrough on the property. And so this walkthrough is not anything to do with inspections because we've already sorted that part out. This is really just to make sure that the home is the way that they seen it when we first went there on that first day that we wrote the contract, if they kind of haven't been back. So in some cases, you'll see some crazy things happening, like people taking fixed mirrors off the walls and light fixtures that they said were going to stay and now they've changed their minds. And so there's, wires hanging from ceilings, there's sheetrock that's been damaged. And even now in our Northeast Florida real estate contracts, you have to leave the brackets for the TVs because that was becoming a huge problem where people were taking those off at the last minute, leaving big holes in the wall. And, that leaves the buyer something to do that they didn't really know they were going to have to do that. So we've gone to this walkthrough, our imaginary buyers, and they are very happy. That has not happened. All the light fixtures are there that they said were going to be there. No mirrors have been taken off the wall. Everything looks great. And now we have scheduled the closing. We know our closing location. We have our closing time. And the buyers know how much money they need to wire in order to fully close on that day. So now, from your point of view, from the mortgage point of view, kind of what happens during this last phase,
Sure.
Yeah.
So by this point, the borrowers would have received their clear to close or their final approval. So the loan would then be sent to closing. The closing department for the mortgage lender will work on sending the closing package out to the title company or the closing agent. They'll have to go back and forth a few times to make sure that all the figures are right, see if there's any mistakes. But most of the time, this gets done probably 2 or 3 days before closing.
Okay.
At that point, we set up the closing time and we make sure that the wire is out So the lender is going to send their wire in addition to the buyer sending their wire, but they're not going to disperse the funds until we get the signed closing package and until they confirm that all the signatures are in the right place. And so really the disbursement is the big part where everybody gets paid and everybody's happy.
Okay. So now me and imaginary home buyers, we're at the closing table. We've got pens in hand and everybody's excited. So we're signing. What's happening in the background there that the buyers kind of don't see in order for this closing to now fully close and everyone to fund?
So we want to make sure that the closers are on standby for those final funding docs. So once they get those docs, they're going to review. Usually, if it's a good mortgage broker, he's letting them know, hey, we've got buyers at the table. They want to buy the house. The sellers want to get paid. Can we hurry this up a little bit?
Okay.
So we get them to approve the documents. And once they approve that, that's when they can go ahead and disperse.
Okay. So when you say disperse, we also use the word funded, right?
That's right.
So that's when we fully fund. That means that everybody gets paid. The seller gets paid. Everybody on the surveyor, the title company, all those people, everyone's paid out. Buyers get their keys. Everyone's super happy, right?
Yeah, that's right.
Perfect. So I think we covered most of your steps to buying a home, but I will have Brian back with me because we have so many topics that we need to cover with 2024 looming. And one of the biggest questions we get asked is what is happening with interest rates? What is going to happen to the housing market next year? So that is going to be our next video, is 2024 housing predictions, housing market and mortgages. So look out for that next video. And I'll also put Brian's website link below so you can reach out with any mortgage questions that you may have. So thank you for coming, Brian.
Thank you so much for having me.
It's so much fun. And we'll see you next time. So thank you guys for watching. Please like and subscribe. And again, see you next time.
Bye.